Good day, and welcome to the Tinna Rubber and Infrastructure Limited's Q2 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Tinna Rubber and Infrastructure Limited. On behalf of the company, I'd like to the company's earnings call for the second quarter and the first half of financial year ending 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I would now like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Gaurav Sekhri, Joint Managing Director, Mr. Ravindra Chhabra, Chief Financial Officer, Mr. Anurup Arora, Senior Vice President of CPG and Business Development. Now, without any further delay, I request Mr. Gaurav Sekhri to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good afternoon, everyone. Welcome to our earnings conference call for the second quarter and first half of the financial year 2024. Let me first brief you on the financial performance, followed by some operational highlights. I am pleased to state that the company has met its earning guidance projections given over past few months. The consolidated operational income for the second quarter of FY24 stood at around 80 crores, which is a growth of 22% year-on-year. EBITDA was reported at 13 crores, which represents a 35% growth year-on-year, and EBITDA margins stood at 16.31%. Net profit is reported at 7.6 crores, which grew by 81% year-on-year, and PAT margins are inching closer to 10% and at 9.54%. Coming to the first half of FY24, the operational income was around 160 crores, which grew by approximately 9% year-on-year. The EBITDA stands at 25 crores, which represents a growth of about 18% year-on-year, and EBITDA margins for H1 are at 15.42%. Net profit is at around 15 crores for H1, which is a growth of 43% year-on-year, and with H1 PAT margins at 9.18%. On the operational front, our tire crushing volumes have increased by 15% year-on-year during the quarter. Sales from industrial and consumer sector continue to deliver positive results in Q2 and delivering an approximately 15% combined growth year-on-year. With the sales from the consumer sector have been very impressive. We have seen growth of 250% in volume. Higher EBITDA margins have been achieved due to operational efficiencies and reduction in the price of raw material as well as corrections in sea freight. We witnessed year-on-year growth of approximately 50% in sales in the infrastructure sector due to government's push for use of crumb rubber modified bitumen in road construction. On the capex front and status of capacity expansion which is underway, I am pleased to inform that our Oman plant commenced production in mid-July 23 and achieved EBITDA positive in September 23. Varne plant at Maharashtra and the TPE line, thermoplastic elastomer line at Panipat, both the projects are progressing well. We hope to meet deadlines and shall be commencing production in the last quarter of this financial year. On further updates, Tinna is the only company representing India as a member to the Rubberized Asphalt Federation USA. I am also happy to inform that we received an upgradation in credit rating to BB+ by CARE. We will be going for another round of valuation by them, by the rating agencies very soon, because we believe we should be able to improve our credit rating. With that, we can now open the floor to questions, and I again welcome you all to this call. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Dhruv Bajaj from Smart Sync Investment Advisory Services. Please go ahead, sir.
Congratulations, sir, for a good set of results. So my first question was that I observed that our volume growth was around 44%, while our revenue growth was only 22%. So is it because of higher growth in consumer division, wherein the realizations are less, or have we seen our moderation in realization in our infrastructure segment?
It's a combination, Dhruv. You are right. The consumer sector products typically are priced lower compared to the products that we supply to the industrial sector, for example. So that has been one of the reasons. Also, there is an overall correction in the end prices because of the downward trend in raw material prices. As a result, some correction in sales prices have also happened. So it's a combined factor of these.
Okay, sir. Got it, sir. And I had another question which is a bit more typical regarding our business model assets. So I observed that since we are growing at a very faster rate in the infrastructure segment, wherein we produce CRN as well as also provide CRNB, which is basically a mixture of bitumen and CRN. So now, based on my understanding, we are procuring bitumen from outside. So are these pure play bitumen players like Agarwal Industries, for example, also providing CRNB in this market? And if not, then what stops them from producing this? Is there some technical complexity regarding this production, or there is some difficulty in procuring CRM from players like you? Because as you mentioned in the investor presentation, the benefits of CRNB are immense, while its current contribution to overall bitumen market is very low. So am I missing something, or if you can explain this case a bit better, that will be very helpful.
So there are, 5 or 6 organized players in the CRM and CRMB business. We are one of them. The other notable players are Concall, which is a joint venture between Hindustan Petroleum and Colas of France. There is also an entity called ITPL, which is a joint venture between Indian Oil and Total of France. Shell also has a joint venture in this place in India. So there are a handful of organized players who are in the business of CRM and CRMB. But we are the only players who have access to crumb rubber, which is the CR in the CRM. So as a result, it puts us in our view, a better position compared to our competition, because we are integrated all the way backwards to processing the tires and making crumb rubber, which is then used to make CRM, and there lies some complexity, where, the other players who are our competitors in this space, they are more of a bituminous products company. They are not tire recyclers. I hope that answers your question.
That is very helpful, sir. Thank you, sir. You answered my question.
Thank you.
Thank you. The next question is from the line of Mr. Bhavin Pandey from Athena Investments. Please go ahead, sir.
Hey, congratulations on good set of numbers. So just one thing, sorry for my lack of familiarity with the company. I could observe that there's some cyclical pattern when we look at the June and September quarter, where September would always decline revenue, would always witness a decline in revenue on Q-on-Q basis. So could you walk us through what is that trend and how does it come into play?
Bhavin, if I've understood your question correctly, your voice is slightly muffled, so it's not very clear. But I think you are trying to understand some sort of cyclicality and seasonality in the business, quarter on quarter?
Yes, sir. Yes, sir.
So you are right. For us, typically Q2 is a weaker quarter because we tend to have slower sales, especially to the infrastructure sector. Because many of the road projects, because of monsoon, etc., tend to go slow. And, the road laying work cannot happen briskly in this period. So to that extent, we witness some cyclicality in our business in Q2. We have successfully managed to overcome that to some extent or mitigate the impact of it because of our, diversity of customer base. And this quarter, Q2, we had the consumer sector kick in very nicely, which helped with higher growth and made up to some of those lost sales, which we typically witness in Q2 from the infrastructure sector.
Okay. And this expansion of margins that we have witnessed is also on account of the better sales mix?
Expansion of margin is due to combination of factors. It is because of, operational efficiencies, scale, as well as, we have seen more efficiency coming our way on raw material procurement, some correction in sea freight, and I think we are witnessing to see some pricing power where we didn't need to pass on, all of those benefits to our end customers.
Okay, those are encouraging signs. And can we see more expansion from your vantage point, or it's difficult to predict right now?
Can you ask me more specifically what you mean by that question? I didn't understand.
Expansion of margins, do you think it is the peak, or we can still expand our margin from here on as well?
See, we in our earlier calls, we had mentioned that we are aspiring to reach 15% EBITDA. And, we believe that is possible, and we've reached there. I believe this is the time to now, consolidate and maintain those margins. That will be our focus.
Okay. I think that's pretty much it. Thank you. Thank you so much.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Mr. Fenil Gala from NPL India. Please go ahead, sir.
Hello, everyone. Good afternoon, and thank you for all the information you shared, and congratulations on the good set of numbers. My question is, on your Oman plant, can you please share your views on the utilization level it is currently operating? At what utilization level is it currently operating?
Hello. Yeah, hi, this is Anurup. So I think your question is about the utilization level for the Oman plant, right?
Yeah. Yes.
So right now the capacity of the plant is around 500 tons per month, and we are roughly operating at around 100% efficiency, and we plan to increase the expansion, before end of the current financial year, and the capacity utilization will be close to 80 to 90% by the start of the next financial year. From there,
thank you.
I think that answers your question.
Yes. Thank you.
So summarizingly, so we are operating at almost 100%. This is whatever capacity we have currently.
All right. Thank you.
Thank you. The next question is from the line of Mr. Kevin Shah from AMSEC. Please go ahead, sir.
Good afternoon, sir. Congratulations for your good set of numbers, sir. So my question is on the EPR policy that has been notified. So when are we expecting this to be coming live and being displayed into our numbers?
So we already have the policy notified, but as you know, this government policy would take some time to, implement in, letter and spirit. So we are already working with government on, the actual implementation on ground level, and also working with the tire companies on collection mechanism, etc. So I think in next year we'll have something on how this turns out to be and what numbers it converts into. I think the next year we should have something to see on ground level. Does that answer your question?
Yes, sir, absolutely. And also, sir, my second question is that we are seeing good attraction in the domestic market. So are we planning any entries into the overseas market as well?
You mean export?
Yeah, absolutely.
So yes, we have started just scratching the surface, like would you say, for the exports market, and we are, experiencing growth of 10 to 12% year on year for the exports market, and so that's something we see a good contributor to future growth for us.
And so this export can be affected by what financial year? Any timelines for it?
Can you just repeat your question specifically?
Sir, any timelines for the export to be begin as an opportunity?
Hi, this is Gaurav Sekhri. Just want to jump in on the export side. See, we have for the last year and a half been always stating how exports is a high priority area for us because we see a lot of headroom for growth for us. The time involved in customer acquisition is usually 2 to 3 years, especially when it comes to the tire businesses, because they are very, very slow, or you can call it thorough in their approval process when they have to change any materials. There is very high motivation on their part because of all of them striving to become more sustainable, but still they will follow their due process, and that's a 2 to 3 year timeline. So we have managed to successfully gain entry in 2 of the large multinationals where supplies have commenced. There are some more in the pipeline, and this work has been ongoing for last 1.5 years. Usually we see a 2 to 3 year period before we start seeing results. But then there are other industries where results can be seen faster. Some other rubber industries where their process of approval is not as long as the tire companies. We are working with them as well. And I'm also pleased to tell you that we have started exports this year to 4 new countries. And we hope to add another 2 before the end of this financial year. And the current year exports will be approximately, we are forecasting 7% of our total sales, while still growing at about 15 to 20% over last year.
Got it, sir. Got it. This was really helpful for me. Lastly, sir, one more question. Sir, any plans to take on debt for further expansions?
For the time being, with the expansions that we have underway, which is a capex of approximately 50 odd crores, we are, Chabraji, what is the exact term loan that we have?
We are seeking term loan of about 28 crore from the banks, and we are very near to the concluding the terms with the banks, and hopefully within a month we will be concluding this loan taking process.
Okay, got it. And also, sir, if I can squeeze one question further. Sir, my question is, we see that the highway construction pace has been slowed down, and we see elections in December. So do we see any muted demand in H2? Because last year, I think it was 24 kilometers somewhat or down. That has been slowed down to 14 to 15 kilometers in H1. So any insights on it?
We do not see slowdown for us personally in H2. You see, government's way of giving data, on highway construction per day. Sometimes they measure it on allotment of projects, but not necessarily, the progress of projects. The pipeline that we are seeing The projects that we have visibility, where already crumb rubber modified bitumen has been put in the specification in the BOQ. When we see that pipeline, we actually expect very good sales in H2. Many states are going into election mode. The country will go into election soon. So there is a high motivation on part of government to finish ongoing projects. And our product is used right at the end.
Got it, sir. Got it. Thank you so much for this one, sir. Thank you.
My pleasure.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Mr. Fenil Gala from NPL India. Please go ahead, sir.
Hello. So my question is, can you please share what is your current raw material price of PCR tires?
I'm sorry?
Can you please share what is your current raw material price of PCR tires?
We believe that is sensitive information. We can give you some range of pricing of tires, whether it is PCR, TPR, because you are processing both. And that is around 13 to 15 rupees per kg.
Okay, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. We will wait for a moment until the question queue assembles. The next question is from the line of Mr. Divyansh Gupta from Latent Advisors. Please go ahead, sir.
Hi, I'm audible?
Yes, Mr. Gupta.
I wanted a few basic questions. So what is our pricing arrangement with our customer? Is it cost plus or how is the pricing of our products done?
So our pricing depends again, on sectors. The pricing in the industrial sector, which is the tire companies, usually the pricing arrangement or agreement is for about 60 to 90 days, and we don't really see unless there is any major movement of 5 or 10% plus or minus, is when we would probably have a conversation. Otherwise, it is fairly stable. The consumer sector pricing is more dynamic because those grades are more commoditized in nature, where pricing arrangements are probably for about 30 to 45 days. In the infrastructure sector, again, we see higher stability of pricing because typically when we start a project and we work with a contractor, those projects are for about 6 months period. And our, of course, pricing agreements with the petrochemical companies, those are more long-term in nature where we have 1 year price validity.
Got it. And given that you mentioned that there are some long-term agreements, how much of our sales right now, or let's say an order book perspective, visibility perspective, would be from long-term agreements with our customers?
I'm giving you a rough guess here, but it could be not more than 15 to 20% of our total sales.
Got it. Understood. Yeah, that's all from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Mr. Bhavan Pandey from Athena Investment. Please go ahead, sir.
Hey, am I clear this time?
Yes.
Yes, Mr. Pandey, much better.
Sure. Nothing, I was just sort of sifting through long-term numbers. So, we could see that 2022 onwards, our ratios have improved, working capital has improved. So, could you walk us through what sort of changes have we made in our business that is quantifying in such a phenomenal way?
I'm sorry, Bhavin, I didn't fully understand your question, please.
Sure. So again, I was just seeing, I was looking at return ratios, working capital days. So they have picked up well since 2022 over past couple of years. The ratios look fine. So what sort of business initiatives have we taken to make this happen?
So it is due to multiple reasons. We have managed to successfully reduce dependence on any one sector. That is the big change that we have worked upon since 2017, and the results of that started becoming more apparent from 2021 onwards. And I think that has resulted in us being able to work with better margins, better quality customers, and we have created a lot of optionality for us in terms of sectors and then within sectors customer base. That has helped us a lot. Also, we have been able to manage our supply chain much better. As a result, our overall cash conversion cycle has improved dramatically.
Okay. Wonderful. Thanks so much.
Thank you. The next question is from the line of Mr. Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So what is the growth outlook for next 2 years in terms of sales and profitability?
We have given, especially since last 2 quarters now, and a guidance that we expect our FY24 number to be at around 340 odd crores, and we are very much progressing towards that. And FY25 number, we are expecting roughly 500 crores of revenue. This is factoring in the new capacities, both with the plant in Varle as well as the TPE, thermoplastic elastomers equipment getting commissioned. We believe we should be able to get to 500, and our vision for FY27 is to get to 900. So I hope this will help you understand, the path that we are on.
So how much this Varle plant and the Panipat plant will contribute in FY25?
The Varle plant, I believe, should be approximately 100 crores, and the TPE plant is approximately 10 crores.
Okay, so base business will grow at around 10 to 15%.
That's right.
And sir, when you talked about 900 crore kind of a revenue, so incremental growth will come from these 2 plants, or we are also focusing on the new capex that you talked about 50 CR?
So the capex I spoke to you about, that was specifically in relation to the Varle project and the TPE and Oman, which is already underway. We do expect to add some locations in order to achieve our target of 900 crores by FY27.
So for that, how much we are looking to incur the capex for the incremental growth from 500 to 900 crores?
I believe that new capex could be in the region of about 100 crores, but I see that only happening in FY26, early FY26, not in FY25.
And the margins would be remain same, around 16%, which we are doing right now, sir?
We expect to improve on it, sir.
Okay. Thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Mr. Divyansh Gupta from Latent Advisors. Please go ahead, sir.
Hi, sir. A couple of more questions. So the EBITDA margin that has seen an increase, let's say YOY, how much would have been the contribution of lower sea freight for this expansion in margins?
We believe that is privileged information, sir. We can't get into specifics of the exact contribution on account of different contributors.
Got it. And this, just the previous question that the earlier caller asked. So the growth outlook that you have given, right, 900 CR by FY27, what is the realizations that you are assuming? Is it the, let's say, previous quarter realization, this quarter realization, any visibility if you can give on that?
I do not know how to answer that question, linking it to quarter performance with something that we expect to do in FY27. I didn't fully appreciate your question. If you can please elaborate on it.
Let me rephrase it. So, by FY27, what is the likely capacity that you are expecting to have, which will lead to this 900 CR revenue?
Okay. We expect that our tire crushing capacity in FY27 will be north of 250,000 tons.
Okay. Got it. And sales mix, any plans of with respect to desired sales mix?
No, we are, very happy with the sales mix that we have today between the various sectors. However, we do foresee a higher contribution from exports over the next 2-3 years. Yes.
Got it. Yeah, that's all. Thank you.
Thank you. The next question is from the line of Mr. Sampath Naik from Tiger Asset. Please go ahead, sir.
Hello.
Yeah.
Hello. Yeah, sir.
Yeah, Mr. Sampath. Yeah.
Sorry, I must have skipped it somehow. But what are the government policies regarding EPR, extended producer responsibility, and how are we favorable to it, and how serious it is, the ground level work which currently is happening? Do you have any idea about it?
Hi, this is Gaurav Sekhri. There are 2-3 parts to your question. They're all linked to EPR. So let me answer as I've understood. One, we believe government is very serious about it. We are following the global example of polluter pays principle, whereby any person generating any kind of product which tomorrow becomes a waste, that company business has to become responsible for it. That is the basis of the EPR, as the name suggests, extended producer responsibility. How the policy has been made is that a tire manufacturing company will have to acquire some credits from recyclers, and those credits will be generated to the recyclers based on their recycling of waste. That way the loop gets completed. And if there is a mismatch between the credits that a tire company needs to have versus it got, then there will be certain penalties involved. So as someone who will be, as Tinna, we will be generating these credits, we will have an opportunity to monetize them as this policy gets operationalized. Now, to what extent that will add to our bottom line, when will that get actually operationalized is difficult to say today. We are, of course, very optimistic. We think it is very positive, and we are very opportunely placed to benefit from it. But when and to what extent, I would not hazard a guess today.
Correct. Okay. And sir, what would the opportunity size regarding it, if that is possible for you? So EPR currently we are looking at steel and other metals.
Mr.
Sampath also. Hello. Yeah.
Very sorry for interfering. Could you please come into a network area, because your voice is distorting a little bit. You're not clear.
Am I audible right now?
No, sir.
Hello. Am I audible?
Yes, sir. Could you repeat the sentence?
Is it better?
Yes. Please go ahead.
So, Mr. Sampath, I think you're asking about the opportunities for us pertaining to EPR policy, right? Was that your question?
Hello, Mr. Sampath?
I think we have lost him.
Yeah, so the line for Mr. Sampath has dropped. We will move on to the next question from the line of Mr. Dhruv Bajaj from Smart Sync Investment Advisory Services. Please go ahead, sir.
Sir, I had a couple of more questions. The first was that we have seen a drop in steel sector revenues. So is it because of lower demand scenario, or are we deliberately focusing our attention in other areas like consumer and infrastructure?
Did you say drop in which sector? Did you say drop?
Steel sector revenues.
Steel.
Yeah.
Steel for us is a byproduct, sir. It is in a tire when we process, some steel is generated. So it is not an area where we do any tremendous value addition. We do some, but like I said, we are really after the rubber. Steel is a byproduct.
Got it, sir. Got it. And so my second question is that since we are targeting to increase our crushing capacity from 130,000 in FY24 to 250,000 metric tons. So you have already answered about what is the type of capex that will be required, but I wanted to understand what is the steady state asset turnover that we expect from this capex. So like in FY23, we were clocking around 4.2 times, and in current H1 FY24, it is at around 2.4x. So what is the targeted asset turnover that this business can generate?
I believe that we are our asset turnover ratio around 3 is a fairly stable number to work with. Of course, we will strive to do better, but around 3 is what we believe is a stable number.
Got it, sir. That is very helpful, sir. Thank you.
Thank you. We have the next question from Mr. Nikhil from Perpetual Capital Advisors. Please go ahead, sir.
Yeah. Hi, Gaurav and team. Congrats on a good set of numbers. My first question is, so I'm fairly new to the business. So can you tell me what is the difference between crushing of truck and bus radial tires and passenger car radial tires? Is the end product different for both of them?
Yeah, hi, this is Anurup. So, truck and bus tires and the passenger car tires, both of them different in the kind of rubber they have. So, for example, the truck and bus radial tires mainly have the natural rubber. So, all our premium products, they are made from truck and bus tires, for example, micronized rubber powder. And passenger car tires mainly have synthetic rubber. So, all the basic grade material, they can be made from the passenger car tires. So that is the elemental difference between the two, application-wise. Does that answer your question?
Yes, very much. Thank you for that. Next is, I think in the last few quarters, the company has acquired a plant in Oman. So can you explain the rationale that why a company that was primarily focused on domestic market, why did it go outside the country to acquire a plant?
So this is Gaurav Sekhri here. For us, we have always had this aspiration to leverage our learnings in India to also implement them in a very opportunistic way outside India. And Oman presented us with this opportunity where we found it's a very interesting geography where there was hardly any recycling happening. They have a steady generation of waste tires, very organized collection, very good working laws for foreign companies. For example, one can own the business 100%, very conducive policy for investment. So when we saw all of that, we found that to be a fit case to test out our theory. And I'm pleased to say, from what we have seen till now, we believe that many of our assumptions have come correct. And we hope that once we gain stability of our operations in Oman, which I had mentioned, we have already achieved EBITDA positive status in the month of September. That's within 3 months of starting operation. We will certainly then look to leverage and see which other geographies we can go. We believe this is a very interesting opportunity where our learning of deconstructing tires and extracting high value of the recovered products is something that we can very successfully leverage in many geographies. And Oman is a starting point for us.
Got it. And in terms of the return profile, do you expect the return on capital employed to be the same outside India?
I believe so. At least in the Oman project, I can tell you the EBITDA margins we are aspiring for, the return on capital are very similar to what we achieve in India.
Got it. And the product mix, so see, tire crushing is one bit of it now.
Sorry, did you finish your question? I didn't fully understand.
I'm sorry, sir. Sir, the line for the participant has dropped.
Right.
Ladies and gentlemen, you may press star and 1 to ask a question. We will wait for a moment while the question queue assembles. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand over the conference to the management from Tinna Rubber and Infrastructure Limited for closing comments.
Thank you. I would like to thank all our participants for listening in today. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valor and Advisors. Thank you, stay safe and stay healthy.
Thank you. On behalf of Tinna Rubber and Infrastructure Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.